During the COVID-19 pandemic, the government enacted several programs designed to help businesses stay afloat. The PPP loan is probably the most well-known of all these programs. However, there is another important benefit businesses need to know about and take advantage of. That's the ERC tax credit, which stands for Employee Retention Credit. Now let's dive into what that is and how it works. For starters, ERC refunds are not a loan like the PPP program, which means they do not have to be paid back or forgiven. Instead, ERC money is given as a refundable tax credit for your business to use however it wants. Basically, it was implemented as a way for the government to encourage private employers to keep paying their employees for doing their work. Now, how does it work? First, you need to be an eligible employer, which is determined by meeting just one of the following conditions. Number one, your business experienced a full or partial shutdown due to government mandates. Two, your business experienced supply chain issues caused by government shutdowns, or your suppliers or vendors were impacted, and then that, of course, impacted you. Three, your business experienced a decline in gross receipts when compared to the same quarter in 2019, prior to the pandemic. Now, one important thing to note about the gross receipts test is that how much they declined varies depending on the year. To qualify for an ERC refund in 2020, your gross receipts must have declined by 50% or more. However, in 2021, your gross receipts need only have declined by 20% from their 2019 level. So it became a bit easier to qualify in 2021. If you are an eligible employer, then the next step in claiming your ERC refund is to determine which employee wages qualify. A lot of this determination will depend on the size of your business during the pandemic. If you are considered a small business, in 2020, 100 or less full-time employees qualify you. In 2021, 500 or less full-time employees. Then you can include wages paid to all of your employees, both full-time and part-time. However, if your business had more full-time employees than what was outlined, you are only allowed to count the wages of employees paid for, not performing services. I know it sounds complicated. That's because it can be. It requires extensive knowledge of the law and program requirements, as well as careful analysis of your payroll tax returns and detailed payroll reports for both 2020 and 2021. At this point, you also need to take into consideration any PPP funds you received, since you cannot double dip, so to speak. Once we've determined which wages qualify, the next step is to calculate how much you can receive. Now in 2020, you can claim up to 50% of the first $10,000 of wages per employee paid between March 13th and December 31st, 2020. In 2021, the amount was 70% of the first $10,000 of wages paid each quarter for the first 3 quarters of the year. Basically, this means an employer can claim up to $5,000 per qualified employee in 2020 and up to $21,000 per employee in 2021. That's $7,000 per employee per allowed quarter. The next step is to complete and file an amended Form 941X, the quarterly federal payroll tax return, for each quarter you qualified for. So it could be up to 6 quarters. After that, all that's left to do is wait for your check and then cash it when it arrives. Please note that the IRS is pretty backlogged on processing these 941X filings. Because of this, they are saying those filing now can expect to wait up to 12 months or more for their checks to arrive. Now, we've seen plenty of clients get their checks from the IRS in a much shorter period of time, but just know it could take possibly that long. In addition, You'll only have up until April 15th of 2024 to file for 2020 and up till April 15th of 2025 to file for 2021. After these deadlines pass, you will no longer be able to file for an ERC refund, even if you would have qualified. Now, we all know that tax code is complicated, and the rules governing the ERC refund are no exception. Not only are the requirements and calculations different for the year 2020 and the year 2021, but there are also other considerations like the PPP loan that you have to take into consideration. Luckily, our specialists here are experts who know how to maximize your claim. So if you think you might qualify, give us a call for a quick, no-cost assessment.